I think we've got a really great panel here. People have done a bunch of really interesting things across the industry around tokenization and payments. I'm going to let them introduce themselves because I would never do it justice. So John, maybe we'll start with you.
Thanks, Rob. John Nahas, Chief Business Officer at Ava Labs, supporting the Avalanche ecosystem, so growth across all sectors, different verticals, international jurisdictions. I've been with the firm almost 5 years now, so it's been an exciting ride seeing all the stuff Avalanche has been doing.
Yeah, Farooq, Malik, co-founder and CEO of Rain. We're a stablecoin infrastructure company focused on payments, making stablecoins accessible and usable around the world for people everywhere.
And Daniel Coheur, I'm Global Head of Digital Assets and Fund Distribution for Apex. For only 2 months prior to that, I was the co-founder of a company called Tokenization. We started 8 years ago at Venture in Luxembourg. We created a standard, the ERC-3643, that is now recognized as the official standard for creating representation of assets on chain. And that company was acquired 2 months ago by Apex.
Gabriel, Otte, founder CEO of Dinari. We are tokenizing the $100 trillion capital market and bringing it on chain and trying to reimagine what it looks like for stock exchanges to be global.
Yep, and I'm Rob Hadick, general partner at a fund called Dragonfly. So guys, I want to start with the topic of tokenization, really high level to start with. This is not a new topic. So I remember I was at Goldman a decade ago when we invested in a thing called Axani, which was trying to do high yield credit on a blockchain at the time. Or we didn't, we used different language at the time because blockchains was, potentially like, bad word. And over that period of time, there's been kind of stops and starts of excitement about tokenization. However, while the growth has been pretty slow, and I think there's a lot of excitement in this room, there was a couple of announcements today, but it's still 26 billion of call it tokenized assets on chain. Half of that, or a little less than half of that, is Figure. So why is now different? Why is this time not just cynically a bunch of asset issuers trying to sell something to a new group of people? Gabe, I know you've been kind of outspoken about this, so maybe we'll start with you.
I think a lot of people are just trying to take advantage of the hype. I think many players are. I think the interesting part of where we are at right now is finally stablecoins are being officially adopted. The stablecoin liquidity on chain is bigger than it's been. So the question then sort of follows from that of now that we have cash on chain, what do you do with that cash? Becomes an interesting question to answer. But as you and I have talked about, I still think it's many years for this to play out in terms of tokenization to come to fruition. I have no doubt that every asset is going to get tokenized in one way or another given enough time because of the sort of efficiency that comes from it. But to fully realize that sort of omni-asset trading and settlement to happen on chain, I think we're still many years away from that. But there's now enough cash on chain to perhaps start to do something interesting and have it sort of grow there. But if we're expecting this to be kind of astronomical growth over a very short amount of time, I don't think that's going to happen.
You have anything to add, Farooq?
Yeah, I mean, I think expanding on that a bit, right, I think we're in this phase where a lot of people are trying to figure out how do we make this like how it is or has been, which is close assets and tokenization behind a walled garden, where there's lots of different institutions that have had meaningful improvements in custody and delivery and pledging, et cetera, but they're using this technology infrastructure as, hey, what if we build a closed loop blockchain? What if we tokenize assets within our own ecosystem? I think the challenge that we're going to see over the next few years is that if you continue building or expanding this like walled garden framework, it's going to not really drive meaningful improvements, right? I think a lot of the utility of tokenization really comes from the interoperability of assets, being able to pledge an asset that is custodied at one custodian to a lender that is outside of that kind of walled perimeter, and being able to utilize those funds to access utility across national borders or even across banks across the street from each other is going to be meaningful. Is going to have to be meaningful in order for there to be any meaningful change in the adoption of tokenized assets.
I would say that I don't think the industry has been ready on the technical front. I mean, the compliance has been changing, of course, for years, but for the most part, most tokenization you've seen over the course of the last several years has been that, right? Like certain people are saying, oh, we want to try this. We want to say we did this. We want to dip our toes in. But that world doesn't really work in the world that crypto infrastructure has been providing. I think you've had a black and white option of either public permissionless chains in which securities cannot trade compliantly, or you had those walled gardens of private permission enterprise chains, but that we're missing the interoperability. I mean, that's something that I'm really proud of that we're doing, and we're working with all of you guys and so many other players, is allowing that infrastructure to actually support the asset, to support the tokenization of the asset, the compliance requirements, the jurisdiction requirements, and the many different requirements that are needed that up until now just hasn't been there, right? All these things have been a nice kind of announcement, a nice proof of concept, but for this to really flourish, it's gonna take time, it's gonna take growth, it's gonna take interoperability, and all these things are now starting to happen.
So you said there was technical issues or constraints that are just now solved. Like, what are exactly those technical issues and constraints that are just now solved? What is the infrastructure and how has it changed recently that makes, call it being able to be at the beginning of that J curve?
So I think, look, I like to talk about the fact that I think as an industry, we've had significant technological improvements, like by making blockchains faster and cheaper and more scalable and all this great stuff, but they don't solve business use cases, right? They're solutions in search of a problem. And we're still, for the most part, have been stuck in a first generation business model that doesn't work for real world adoption and real world assets and tokenization, which is the general purpose layer one thesis, right? Put everything on a single blockchain and it'll all just work. It doesn't work that way. The world doesn't work that way. Payment rails are different than securities, that are different than tokenization, than identity, than data, than whatever it may be. So I think you started to see this growth on the L2 side with Ethereum because people wanted that narrative and wanted to be connected to an ecosystem, but the interoperability really wasn't there. And now you're starting to see, other players, you're going to ask me about this probably, launching their own layer one blockchains. And we're proud that we're able to launch many different blockchains that are either jurisdiction specific or compliance specific or asset specific, but have the interoperability that's necessary to allow cash on chain to transact with equities and tokenized assets on chain. You can't have one without the other. We've had all this tokenization, but we didn't have the cash to trade it against, and vice versa.
Daniel, you're kind of in a privileged position because you talk to all the issuers, right? And so you hear what these guys say as infrastructure providers, service providers. What are you hearing from the issuers? Why are they excited at the moment? What has changed recently for them? And are you also hearing, hey, listen, we just want to reach a new audience, or there's some broader plan that exists?
Well, first of all, I think that you were mentioning some limitation from a technical perspective. The moment that you deal with a regulated instrument, that regulated instrument needs to be serviced by a third party, being an asset servicer or a transfer agent. So part of the reason why we didn't see tokenization at scale is because those service providers didn't have the capability to implement tokenization within their own infrastructure. If you look at the top 10 fund services, for example, they work with 5 platforms, Paxos, FIS, eFront, etc. They simply didn't have the capability to tokenize. So the first thing that we need to do is to bring this capability within the fund servicer so that we can tokenize it at will in a way. So what is interesting now for asset managers and why I think it will accelerate is because we spent 8 years building this capability and implementing that capability within asset servicers. Apex, if you're not familiar with the company, that's a 13,000 people company. We service 30,000 funds for 14,000 customers. We spent the last 2 years implementing that capability within the back end, within the fund accounting system to enable that tokenization at scale. So now, if an asset manager comes to Apex and asks for tokenization, we can implement that in just a couple of days. That's the game changer. Now, that brings the benefit of digitalization. That doesn't bring the benefit of decentralization. So most of the benefit in the short term are on the asset services side. They create operational efficiencies. But in order to deliver the benefit of decentralization, you need to do that at scale. So if you want to achieve secondary trading, expanding distribution, collateralization, you need to have enough market participants. You need to have enough assets represented on chain. So we now have this capability. So we now are in a position to deliver that value proposition to asset managers. That's why, obviously, we made this announcement today with Skybridge that we're tokenizing 2 of their funds for around 300 million. So now we bring in this capability behind the tokenization to allow the investors to access secondary and other third-party value-added services that will be appearing in the coming month because innovation is going at a speed of light. So this is something that we cannot project yet what will be those services, but they are in the making.
Okay. Maybe on that vein a little bit, but Farooq, I'll jump to you. So there's a lot of different types of stablecoins. There's different standards. There's different types of money market funds, different standards, different legal structures. There's different tokenized assets that are different standards, different legal structures, different technology stacks. Now we're talking about also like deposits, tokenized deposits. We're talking about call it a bunch of other things that look like maybe stablecoin-ish, right? Are we worried about just like this like hodgepodge of things that kind of people put out there for their own incentives but have no interoperability and just create this like huge amount of fragmentation that are essentially don't solve anyone's real problem, if that's the case? And how would you view that as somebody who kind of serves that broader ecosystem?
And look, I think that is not unique to the tokenized ecosystem or digital assets, right? Like you look at like gift cards, right? There's every merchant everywhere is issuing a gift card for a variety of things, and there's only a handful of people that are actually getting any meaningful deposits in that gift card ecosystem, right? And so just by having it doesn't necessarily mean that consumers want it or anybody wants it, right? And a big thing that we've been focusing on is that in the very early days of building Rain, we realized that there was all these competing stable coins, a bunch of different blockchains that had various value propositions, and it was a very diverse ecosystem, and it's continuing to get more and more diverse, right? I think that what we realized is that the way that the enabling technology can be whatever it is, but the way that people consume money or spend money or earn money, that's all for the most part the same. And it's the same everywhere in the world. Same with tokenized assets, right? So the way that you save, the way that you pledge collateral, the way that you borrow against online or on-chain assets is the same as how you do that with traditional assets. And the way that people interface with various different types of tokenized securities or tokenized assets or tokenized money is meaningfully similar to how you would do that normally, right? Tokenization is a mechanism to provide cost savings and automation by utilizing smart contract infrastructure and tokenized blockchains to drive significant improvements in efficiency. It's not necessarily just meant to be something that you do just for the sake of doing it. And so that's really been a big focus on how we think about this market. And I think that as more people start interfacing with it, they'll realize that, hey, this is actually the right way to start thinking about it, as opposed to thinking about it as a standalone asset class or a standalone technology or a standalone infrastructure. You have to think about this in the construct of how people operate their business, or how counterparties hold and spend or transfer assets, or how consumers hold, earn, store, save, spend, right? And so all of those types of things are unitary, whereas all the enabling technology is very diverse. And so in the short term, like we're seeing it now, right, where lots of different people are going to launch L1s or L2s or their own tokenization platform or their entire suite of asset services or whatever it is, and there's probably great business reasons to do that, right? The challenge with that is going to be that where's the adoption going to come from? Are those things going to be adopted by institutional adopters or consumer adopters? Will there be like staying power of anybody that's holding these assets? All of that is yet to be determined, right? What we found so far in this market is that for the major players in tokenized, like real world assets, for example, all the money lives off chain, right? So it's just a mechanism by representing some sort of instrument on chain, but all the cash is going into institutional custodians, it's going into T-bills, and all of that is being held outside of that ecosystem in the hands of traditional players for the most part. And there's great players like Apex that are coming in, driving some innovation there. But for the most part, the market participants are holding the money in the way that they always hold money. And we've seen this story play out, right? Like in the last kind of bear market, a number of real world assets were plagued with no repayments or rehypothecation problems, and the money was stuck or gone, and people didn't pay back. And you can't solve this problem by moving the industry forward, but then leaving it as a sole dependency on the existing way of interfacing with money.
Maybe Gabe, on that point, so you just launched or announced that you're launching your own L1 on Avalanche, trying to become the DTCC of crypto or tokenized equities. Some would say that you don't necessarily need a clearinghouse in and of itself in its own, call it blockchain, and because blockchains already can do that, right? Tell me why that's not true, right? And why it makes sense for, call it your own for your standard L1 versus somebody else's standard versus somebody else's standard?
Yeah. So our L1 is a special purpose L1 that is not aiming to aggregate all of the liquidity onto our chain. Rather, what we found is, whether it's Base or Arbitrum or Solana or whatever chain is, they're competing for liquidity, right? And so they want, tokenized NMS securities on their chain, let's say, right? It's the biggest asset class, so they want whatever tokenized version of that to be on there. Well, what we found is we want to work with all these partners to fulfill, whatever their desire is. However, we don't want to your point, fragment liquidity. And that's exactly what happens if you just mint to Solana and it just trades among Solana. You've fragmented liquidity, from between there and Arbitrum and Base and all this stuff. So we built our specific purpose L1 to be an order book that matches orders across chain. So now an order can come for Apple shares on Solana that will get matched with a sell order on Arbitrum or Base or whatever. And the technology was built so that it will sort of seamlessly do the trading while keeping a master ledger of all the assets across all the
Can't you just run your own solver or run this off chain? Why do you need your own blockchain for this?
So we have run this for the last couple of years off chain. The reason for doing it on chain is twofold. One is like kind of DTCC and the way it is today, we do want this order book to be member owned. And so we don't want it to be on Dinari servers, basically. And so we already have partners, consortium members that are coming in that are helping us with the governance of this order book. And the second part really is I feel like transparency is kind of overused, but I think there was a need for us to balance sort of auditability with privacy, which is something that we could do on-chain a little bit easier, actually, than doing it on our own servers. So it was a couple of those reasons why we decided to actually on-chain this thing. And just to be clear, we're now allowed to do this only because FINRA and SEC have allowed us to do this. So part of why now is also we've just been waiting for the regulatory framework to sort of come into existence to allow for this in the first place.
Yeah, so we've seen all of you have alluded to these other blockchains that people are launching. There's obviously the Robinhood L2. There's but now there's the Stripe L1. There's a Circle L1. There's I think I know of 15 more like that are coming out soon, and I'm sure people here do as well. What's the end state? Are we bullish or bearish? And how does these all collapse at some point? Are they? And I get Farooq, you mentioned the incentives, but obviously it seems to me is not sustainable. But I don't know, John, you probably have a perspective.
I think it's absolutely sustainable. I think it's what's going to happen in the future. I think what's going to collapse is a lot of what currently exists out there. All the general purpose L1s that remind me of the early days of the internet, like AOL. Let's just put everything on one single
Solana's
site.
AOL.
One single, yeah.
Okay.
A very fast singular AOL, correct. I don't see a world in which all of the trading, all of the digitized assets and identity and government use cases and applications all trade on a single blockchain. That's not the way the world works. AOL had its moment. AOL had a tremendous trajectory. Kudos to our competitors. But there's a ceiling there. Right? AOL hit a ceiling, and then WordPress came and just opened it up to everybody, and I think that's where we are. I think you've seen all these L2s first launch, because to me that's kind of like the IBM analogy, right? No one ever got in trouble for hiring IBM, right? But it wasn't always the best choice. And Ethereum is safe, and Ethereum has been around for a long time, and there was a narrative and an association with Ethereum that was very beneficial. I think that's great, but L2s don't finalize instantly. You need to wait 3 days, 4 days, whatever, however long, however many hours for those transactions to finalize. Finance doesn't work that way. I mean, it does work that way. That's how the incumbent systems. And what are we doing by putting it on chain if it's exactly the same thing? So to your point, I think we're starting to see this shift with purpose-built L1s. Gabe is leading there on that example. But we've seen this on our side with Balcony that's bringing $270 billion of deeds in New Jersey on chain, on their own chain. right? Because that's not going to trade alongside meme coins and NFTs and JPEGs. You're seeing FIFA, a global sports enterprise, wanting to launch their own chain in which they're going to have a whole lot of use cases across payments and tokenization and collectibles there. So you're seeing it now with Stripe, and you're seeing it with Circle, right? These guys are crypto native, though. They have the understanding, they have the knowledge, and they have the first mover advantage to say, we're just going to build our own layer one. But they're not building a general purpose layer one. They're building a purpose-built layer one for their use case, for their business. And you're seeing this with jurisdictions. We launched the chain in Saudi Arabia under the monetary authority there with banks that are based in the kingdom, with nodes based in the kingdom, because that's what was necessitated for their compliance requirements. Now imagine how many more banks and how many more enterprises and how many more asset managers and how many more issuers are all going to eventually want their own blockchain. There's not enough engineers, there's not enough resources to do that. So you'll be able to spin up your own blockchain, whether private permissioned or permission public or public permissionless, and have that interoperability. I know we provide that. We have fantastic partners that allow for that. That's where I think this industry is going, and that's where I think it should go. That's our bet.
Okay, so you heard it here. Avalanche is WordPress, and Solana is AOL. So we're going to quote that one.
AOL won before WordPress did.
Yeah, okay. Daniel, so from your seat, obviously it's kind of core infrastructure for a lot of these people, these asset issuers. You talk to so many people across the industry. Like, how would you respond to that, right? Like, what is your perspective on that? And what do you think your clients' perspectives on that will be?
Well, if you look at every single financial institution as being its own network today, well, we can only do better, right? So if there are still 20, 30, or a couple of hundred chain, you will still going to deliver operational efficiencies by having the data represented on a chain that is natively interoperable with a second one, and everyone sharing the information transparently, removing the need for a lot of third party. We mentioned, BTCC, CSD. Obviously, I spent 10 years at a CSD, so that's the reason why the first place I invested in Tokeny is because I know that this business is doomed. Now, not everything, obviously, that they're doing will disappear. There is one thing to manage counterparty risk. There's another one to manage systemic risk. What happens if a company is going bankrupt overnight? That's what a CSD does. So those are still things that needs to be addressed. But yes, I think that there is definitely a future where there be a number of blockchain, and there will be solutions that provide interoperability, being layer zero, being Chainlink, wormholes, and others that will ensure that from a technology perspective, you don't have to worry about it because it will be managed by someone else. And probably in a couple of years, we will not talk about tokenization. That's my biggest hope, because tokenization is nothing that's representing the asset on an infrastructure that has more capability. Do we talk about excelization? No. So why are we talking about tokenization, right? So all this will disappear. We'll focus on user experience, value creation, and the technology as much as we've seen that with the internet. Nobody knows how TCP/IP works. Nobody cares. In the mobile phone, you had to put your GPRS access point in the beginning. Otherwise, you couldn't roam. All this will disappear.
So,
real quick, he did mention something I want to touch on, because you did kind of create a quote for me that I didn't really say. He said in the future we're not going to talk about tokenization. Everything will just be tokenized. And in the same vein, in the future you won't talk about on what blockchain is it on, right? It's not on Avalanche. It's not on Solana. It's not on Ethereum. Where is it? Who cares, right? It'll be on whatever chain somebody decides to launch for that use case, right? Yeah. So there could be in the future, and there should be in the future, 1,000 Ethereums alongside 1,000 Solanas, alongside 1,000 move-based virtual machine chains. And in 3 to 5 years from now, it's silly to think that there won't be a better virtual machine than the EVM or the Move VM or the SVM or whatever the VM of the moment is. There'll be breakthroughs that continue to grow, and those breakthroughs will be adopted on new purpose-built blockchains that will have interoperability with legacy-built blockchains, and the wheel will continually grow rather than just kind of spin in place, which it's been doing.
Maybe one interesting figure, when we started 6 years ago, Corda was like the private chain everybody's talking about. At its peak, Corda had 150 developers coding, right? I remember, they were all at PwC in Paris, so that's why 6 had a problem when obviously someone else hired all the developers, they couldn't develop in Corda anymore. In the event world, if you look at Solidity, for example, last count, there was around 600,000 people who can code in Solidity. And there's not even a school that, teach how to code in Solidity. So that number increased day by day. So in a year from now, there will be 1 million people. So think about what it means in terms of reducing costs, creating efficiencies, and unlocking innovation.
Yep. Okay. So a few minutes left. I have 2 questions I want to do, like kind of rapid fire, get everybody's responses to. First one is, tokenization fails, things don't get tokenized. what happened, what went wrong, or how did the world evolve? Gabe, maybe we'll start with you.
I think the failure would be on the regulation and the compliance part here. I mean, throughout history, the better technology wasn't always chosen for one reason or another. Our financial system is largely, today, built on technology that was built in the 80s. So these things take time. And so I think that's the main thing that would get in the way. That said, I'm seeing really positive changes on that, right? We're the first broker-dealer to be able to tokenize NMS securities that FINRA approved, right? So there is movement here and a willingness to participate. So I'm very bullish that everything's going to get tokenized, but if something's going to stop it, it's because somebody, the powers that be would say, no, we're not going to shift over to this better technology.
Well, I sold the company 2 months ago. I don't care anymore.
The most honest answer on this panel. Love it.
Well, I think coming back to the point we said, well, it's not about tokenization. There's a better technology out there, and this is tomorrow capital market infrastructure. As much as internet became obvious to everyone because this is the infrastructure to transfer information, blockchain is the infrastructure to transfer value. That's what it is. Bitcoin shows us the way. That was an application, but Bitcoin is as close to tokenization that TikTok is close to emails, right? Sitting on the same infrastructure. So this is just going to be part of our everyday life without even noticing, as much as we're exchanging emails today, and we thought it would never happen. And you see the adoption curve is exactly the same. We reached 800 million users after 20 years of existence of the blockchain. Same thing for the internet, and then you have those applications that basically demonstrate the value, and then you have those tipping points suddenly happening. I think that we will see those applications coming in a couple of months, and we'll see the tipping point, and we'll not talk about tokenization anymore.
Yeah, I mean, echoing, what Gabe said earlier is, I think regulation has the potential to really muck things up. And I mean, look, if you look at the internet, right, there's a lot of countries that got left behind on the internet, because even today, if you go there, you try to connect to Wi-Fi, you have to put in a national ID number, right? They want everybody that connects to the internet to tell you who they are. And a big part of America was that information is free. And that's been a big ethos in this country, and it's a big thing that lets us kind of innovate freely, or has historically let us innovate freely. And I think that right now, technology, I mean, whether it's AI, whether it's blockchain, whatever it is, it's like regulators seem to think that anybody that wants to push an industry forward or create a new paradigm is inherently bad. And I think that that has changed a bit. I think that there's a tremendous amount of work still to be done, but I think that that really has the potential to mess things up.
If it is to fail, which it won't, but if it is, I would blame it on this industry, spiting its face to save its nose, arguing about the minutia that on the day-to-day basis, and not really providing solutions to fix people's problems and doing things that actually change people's lives for the better.
Last question. I want like two sentence answers. So start with you, John. Your most controversial take about where we are 5 years from now.
Come back to me, Gabe.
Well, just go down the line.
Okay, Farooq.
Well, I'm going to be consistent. I'll be on the beach.
Look, I think for us, I mean, the way that I think about this and that we think about this at Rain is that it's just money, right? It's just the next iteration of how you can program things and make it more efficient, make it more accessible. And so right now we talk about the enabling technology, but it's just money.
That's not controversial at all.
Controversial take in 5 years from now, no one's going to care about blockchains like they do today.
Is it my turn?
Yeah.
I think
I'm still on the beach.
Crypto and finance are going to become synonymous. I think 5 years is a little bullish, but you said be shocking. I actually don't think there's going to be a difference.
Okay. I'm a VC. I have to be optimist. So. Okay. Well, thank you, everyone. Thanks for the panelists, and appreciate the time.